Well, hey there, Southern Oregon. Welcome back to the Real Estate Show. So happy you could be with us today. I'm Alice Lema. I'm a local real estate broker with John L. Scott here in Southern Oregon. And today we have the great pleasure of welcoming Giles and Beth Rodriguez of Mutual Mortgage to bring us up to speed on all the latest from the Federal Reserve to the financial markets, mortgages. We had some interesting national job reports, which all affects home buying. So Beth Rodriguez and Guy Giles from Mutual Mortgage will be joining us here in just a minute. Before we bring them in and find out the latest of the financial markets, let's take a quick second and check with our local stats. Now, here we are, very early January, so we're not quite finished compiling all the year-end numbers from 2022, but we're very close. And so I just want to tell you which direction the wind was blowing last year. So this is residential. Southern Oregon. We'll start with Jackson County. The year looks like 2022 year is going to end with prices up in Jackson County 4%. And the average price for residential is a whopping $506,800 is about where it's headed. Now, again, we're going to have to give it another week or so just to let the numbers officially settle. But it looks like Jackson County is going to end up with a 4% increase. Now, interestingly enough, Jackson County number of residential houses sold in 2022 is down 12%. So Jackson County down 12% number sold, prices up 4%. I bet that surprises you. But wait, there's more. Josephine County prices look like they're going to finish up 5%. And check it out. The average price in Josephine County for residential, $461,880 looks like where that's going to be settling down. But again, the number of residential homes sold in 2022 is down 11%. So very interesting. Josephine County number is down 11%, but the prices are up 5%. And Klamath Falls prices are up 8% to an average of $321,322, but their number sold is down 15% for residential in Klamath Falls. So Klamath Falls up 8% for prices, but the number of houses sold is 15% from 2021. Very interesting numbers. So let's bring in Guy Giles and Beth Rodriguez from Mutual Mortgage. We're going to take a quick break, say thank you to our sponsors, and we'll be right back. Well, hey, Southern Oregon, welcome back to the Real Estate Show. I'm Alice Lema, your host of the show, a broker here in beautiful Southern Oregon with John L. Scott Real Estate. And today we get to talk to Beth Rodriguez and Guy Giles, again, of Mutual Mortgage. They are our local in-house lenders. Welcome back, guys.
Hello. Hey, thanks. We're happy to be back. New year and everything, ready to go.
Yeah. And so one of the things I wanted to ask about today is there's lots of different kinds of approvals in lending. And I just wondered if you could maybe clarify and talk about what they are and what they mean.
Yes, absolutely. That's a big question that's out there. What's the difference between a pre-qualification and a pre-approval? So just to differentiate between those, a pre-qualification, so a lot of the online lenders that are well known, those are pre-qualifications. So what they're going to do is they're going to take the 1003 or loan application, and they're just going to get your basic information, but they're not going to gather any documentation from you at that point to really follow up and make sure that that is a good, true pre-approval. So they're going to just go off of basically what you stated on your application and say, okay, well, based on your information you've given us, you are pre-qualified for this amount. So a lot of people take that and they think, oh, I'm pre-approved at X amount, where actually that may not be the case because they haven't really seen that documentation, and there may be some conflicting things, which income was used, was it net or was it gross? And so that's sometimes a lot of things that the buyers maybe are not aware of. So a good lender really truly is going to do what's called the pre-approval, meaning that we've not only taken your application, we've run your credit, but we've also gathered gather the basic documentation, which is, your income, the assets, making sure, okay, this is really truly where you're at. So you have a lot better idea of what they truly are qualified for before they start looking. So, the sad part is if they get that pre-qualification, they go out looking, they think they're qualified for this amount and fall in love with a house and come back, and that's really not the case, and things can change drastically. So that's really important, to get a good lender that's really going to take the time to get that pre-approval for you. And then, some even, we could take it to the next step even and do a borrower underwrite pre-approval where they have actually gone through underwriting with the property to be determined. So maybe they haven't found a house yet, but we can also do that. And sometimes with a little bit more complicated income or that sort of thing, it's good to be able to do that. So that's something that we do too. So that's your basic main difference in a nutshell with the pre-qualified versus pre-approval. So,
and I don't think people realize that this happens, people, consumers, buyers, they just don't always know. Especially if it's been a long time since they've purchased or it's their first time, they don't know how to decide if they have a lender who's really qualified them, pre-approved them. And then they go, like you said, Beth, and they go and write offers. And then what if the offer gets accepted? And then 5-10 days later, the buyer has to terminate the transaction because they weren't actually qualified.
Yeah, everything just blows up.
And they're just heartbroken. The seller's mad.
Yeah.
So
I've actually seen good faith estimates from some of these out of state lenders that they don't realize that we're going to collect around 11 months of taxes in an impound account. So they just quoted.
Oh, that's a good point.
And so you're thinking you're coming in with, your down payment plus the closing costs, and it could be thousands of dollars off because they don't know what we collect here. So we've actually had people come to us and say, hey, you know what? These guys are looking a little bit cheaper than you guys because we're very competitive on our rates and fees, and generally just not beat, especially from anyone around here. And it's one of those things where it's like, I don't know why, but let us look at what they're talking about. And we see big mistakes in the escrows, and by escrows meaning your taxes or your insurance. They might, you might have a close date of the 15th of the month, and they put down 2 days of interest at the end of the month. Well, really, you're collecting 15, which could amount to hundreds of dollars there also. So there's a lot of ways that I don't know if it's intentional or not. I'd like to think it's not. It's just ignorance. But where they I don't know. I guess the biggest way to explain it would be what the big print giveth, the little print taketh away. And we've seen that time and time again.
Yeah,
well,
I
and
actually have a true story that happened with one of my clients not too long ago that I closed, and I kind of rescued their loan from an online lender. And what that online lender did, well, there was several things. There was 3 major things, but one of those was they were not aware of the FHA Jackson County loan limit. So they had their loan $7,500 over what it was. So
oh gosh, but see, and that's because they're not here.
Exactly. That client would have gotten to the signing table, or, hopefully it would have been before that. But all of a sudden, that was just yet another thing. Oh, guess what? You have to bring in $7,500 extra. And so, yeah, those are just things, like I said, maybe it's not intentional, but they just don't know. So,
well, and it's also, I think, the structure of those other entities, the online lenders, like you said in the beginning, Beth, they don't do a full evaluation of your financial life. They just do the bare minimum, which saves them money and saves them time. But this is why we wanted to talk about this today, so that our listening audience knows that when they're going out or they're helping their friends and family go out, that they know to ask that question.
Correct.
And that's why it's not just that we want a local lender here in case we need to go talk to them. It's so that we know they're going to actually go through the whole procedure up front before you go writing offers.
Yeah, absolutely. It's really, truly, it comes down to basic data entry on one, and then basic, we're actually, just experts in that and really looking at all the fine-tuned details and knowing for our area as well.
Yeah. And you know what else? Sellers should be looking at who the lender is when they're getting offers, right? Because they get burned as well by
Correct.
going off market with a buyer that's not. Yeah.
It's true. That's what we're always happy when we get calls from the listing agents on one of our clients' offers. And we just love that and that opportunity to really just reassure them it's good, solid borrower. We've done our due diligence. This is what we've done. And so it does make a big difference in the sellers.
Yeah. And Guy, you were talking about the difference in taxes because Jackson County is really quirky. And it's hard to explain a lot of how Jackson County operates, but it's not just the insurance. Now it's the fire insurance, right?
Yeah.
We've got like a lot going on with that. And how much is that going to cost?
There's been a lot of things up in the air. I remember a few years ago, we went through it with flood insurance when flood insurance was going to change for everybody. And the people finally spoke up, and this kind of happened with some of this fire that was trying to come down from Salem not that long ago. Yeah, they're trying to resurrect it. But, the reality is a lot of the area is in a high risk spot. So I know if I was an insurance person, I don't want to hear this, and I definitely don't want to say it. But, if you live up there in a bunch of trees, which one of my properties is, I mean, it's definitely a lot more fire danger than, out where I live, where there's no trees at all. So, I mean, it is something that some of that legwork that you definitely do want to try to do up front the best you can, as far as getting some quotes from your insurance agency. But the thing with the taxes, it's so weird around here that we should dive into before we get too much into insurance, is that about 20 years ago, I don't remember exactly when, we voted in that they could only raise our property taxes by about 3%, because that's really where
a year
inflation. Yeah. So if you have a house that you really haven't done any work to, it's just been creeping up at 3% for the last 15, 20 years. And so say you go in and you remodel your house and you spend $50,000 doing that, but you didn't pull a permit, that's not necessarily going to flag the tax people to where they're going to raise your taxes up. And then you have a person next door, house in the same subdivision, built the same year, basically the same house. And this person did pull permits for his or her house. Maybe they only did $12,000. So if you do more than $10,000 worth of improvements and you turn all that in, your house is going to be reassessed. So you could have two houses next to each other, both updated. One spent $70,000 updating it, and his taxes are actually lower than this other house that this guy spent $12,000. Hopefully I'm not getting too deep into the weeds, but it's really important as you're shopping for a house, especially in Southern Oregon and around Oregon, where you look at the taxes, because you could be in the same subdivision and have vastly different taxes.
And then you should ask why, because it's a bad idea for people to be doing major improvements and not get a permit. There's no happy ending to that. Not at the time, not when you go to sell. And then as a lender, how are you adding in the fire?
Well,
when you're doing the pre-approval, because doesn't that affect people's pre-approval, their insurance?
It does. And we just try to go the extra step and talk to insurance people when we can.
Oh, that's good.
Get a heads up and give them a property address, and it makes it easier on them and a little bit faster during the process too. But we're trying to have all these conversations, with people, because it is definitely a cost. We had one signing this morning with some flood insurance, and the guy loved the house enough, he was happy to pay for it, but it was one of those deals where that's a deal killer for a lot of people when it comes down to that, and shopping for the right flood insurance and the right house insurance, all that is part of the equation. But yeah, we are trying to factor that in when we're talking to people, because the last thing we want to do is quote somebody a rate and quote somebody rate is going to change every day, but we try to be responsible about the taxes and insurance and say, we got to look at every house, because it's going to be different.
See, and that's time consuming, and not all the lenders want to do that up front.
No.
So that's why asking these questions before you pick a lender is super important.
Yeah.
Yeah.
It's
We're talking with,
definitely
oops, sorry.
no, go ahead.
I was just going to remind the audience, we're talking to Guy Giles and Beth Rodriguez of Mutual Mortgage. They're our in-house lenders. Going back to the pre-approval and the disasters, if you don't do all that work up front, part of the reason some of the other lenders don't is because it costs something for the company to actually do all that work, right?
Yeah, I mean, it's important for us because I've said it before, my canned soup theory, but if I'm at Costco, I don't need somebody throwing a can of soup at me because I didn't do them right on their so we live
That
here
might
and
hurt.
work here and have friends here, and I don't want, it's just the right thing to do to make sure they're going in when they make their offer and everything is done correctly. So yeah, we have a bigger interest. We're not just fielding 1,000 calls.
Yeah. Well, it makes a big difference on the smoothness of the transaction. And it doesn't matter if you're on the buyer or seller side. If you've got a lender that took the time to do all that, then you're not going to have ugly surprises about the loan in the middle.
And that's why when somebody gets a phone call, this just happened day before yesterday, where
We're going to have to take a quick break. If you've got a good story, you're going to have to hold that thought. Sorry.
how about a mediocre story?
We're talking to Guy Giles and Beth Rodriguez of Mutual Mortgage, our in-house lenders. We'll be back in just a quick second after a word from our sponsors. Don't go away. Well, hey, everybody. Welcome back to the Real Estate Show. So glad you could join us. We're in the middle of a really educational conversation with Beth Rodriguez and Guy Giles of Mutual Mortgage. They are a local lender. They're a sponsor of the show, which we appreciate very much. And they're just a wealth of information. We've been talking about the difference between pre-approval and pre-qualification, and the difference between local lenders and out of area lenders, and kind of the ugly surprises that happen if the work isn't done up front on the buyer's finances. Can be big trouble in the middle of the escrow.
Yeah. And it just comes from doing this for a while, where you get trusted from the real estate agents around town. What I was going to say, I guess, right before the break was we had some people coming down from Portland that were looking at houses, and I called them Monday to check in, see how all the house hunting went. And they said, they really fell in love with the house, but they were worried because, they have to sell their house up in Portland. And that's actually, it was nice because I was able to call. I knew the listing agent really well. And when I told her that I had pre-qualified these people, it made the difference. And I haven't even told you yet, but it looks like we're going to get the offer accepted.
Oh, that's wonderful.
With a contingency. And that actually kind of goes into a lot of the fears that are right now, as far as people, with rates going up and with some different things. I mean, this market has shifted a lot. And I just remember, somebody coming in and being pre-qualified at a certain amount, and then they find a house at that amount. And I'm thinking to myself, they're never going to get it because this is a good house. There's going to be 6 people bidding for it. It's going to end up going over what it was. And
you mean in the market we just came out of?
Yes. Yeah.
Not the market we're in right now.
No.
Yeah.
And I guess I'm saying it to say that a lot of people thought, well, it's the end of the world. Rates went up a little bit, or, something happened. And there's actually been some shifts that have actually helped as far as being a buyer. Yeah, they might accept a contingency at this point. You're not shuffling to where you had to have your house sold before. You're not going in $20,000-$30,000 over. You're actually maybe getting some of those people to buy down your rate partially. And just something that was in this guy's mind from Monday, where he was thinking, well, I'm never going to get it because I have to sell a house. It's kind of nice being a little bit in control rather than the sellers just being the ones in control like they have been for years now.
Yeah, it's a more neutral market is more welcoming to everybody. And people can make better choices because they have time.
Yeah.
And they won't overpay.
Yes. That's very good.
Yeah, you don't have to throw 2 more bags of money on the porch.
We actually had a talk. I don't remember who it was with this morning, and they were talking about, I guess it was at our closing this morning, where people were talking about, they think the markets are going to crash. They're waiting for the crash. They're waiting for houses to go down. And I had Brad Bennington in my office yesterday, and we were talking. He's the head of the home builders, and all the houses that they lost over there in Phoenix and Talent, those haven't been replaced yet. And we were kind of behind as far as having enough houses for everybody, even, before all this stuff happened. So I think if people are waiting for big crashes, it's not going to go up as fast. I really don't think that we're going to have a big reduction in prices around here. It might feel like it because everybody had been listing their houses for more than they were worth and they were getting it. So why not do that? But then we're just ending up landing on a realistic place. So it's not bad to, if you're thinking about this, to be looking right now, because the last thing you want to do is get too far into spring when the sellers feel like they're a little bit more in control. And this might be the time to get your
Well, they're
garden.
more hopeful. They're in the hopeful stage.
That's true. We don't deal with that side as much as you do.
Yeah. So, the other thing about the market right now that I think is a positive that's getting overlooked, or maybe just not brought up as much, is that we have the perfect storm for the buyer. We have more houses than we did. The market's prices are not going up. They're stabilizing or going down a little bit. And because of the chaos in the world, the sellers are a little less, I don't know what the word would be, but the sellers are more cooperative.
Mhm.
And the rates are down, right? They're not 7.5. They're like what, in the high fives, low sixes?
Well, it's going to depend. You're buying your rate at that point. We had another $1.4 trillion spending that happened, and you know me, I never get political, so I won't go too deep into that.
But we do need to talk about that because that's counter to the Fed's inflation reduction strategy.
Yeah,
right. So that's a good thing to bring up. If the government is still spending lots of money and creating inflation, what's that going to do to the Fed's decision about mortgage rates, do you think?
Well, it's like half of them are smoking weed and the other half are on crack, to be honest. I mean, just trying to decipher what these guys think and the moves that they do that are just completely counter to what their mandate is. We ended up putting over $5 trillion into the economy, and yeah, it might have created a job or two for a little while, but it created inflation. And these are cycles. We've been in inflation before, but they're just, I don't know. I think they're finally doing the right things to keep it under control. That doesn't necessarily mean that they're lockstep with the people that have the purse strings that wrote that other $1.4 trillion budget last week. So, unless we can talk these guys into just doing what's right for the country rather than what's right for an election or what's right for the next 20 minutes, honestly, I'm a little bit at a loss. What's going to need to happen is rates are going to need to stay up. At least we're talking about the rates that the Fed is in control of, that they've been raising up 3/4 of a point, half a point, whenever they meet lately. That's probably going to stay up for a little while. We have seen some easing in Germany, around the world, as far as some inflation numbers that we're looking at.
Okay.
There's jobs reports, all kinds of things this weekend, and some of them contradict each other. Sometimes they, I think overall that they're looking more in the rearview mirror than they're looking ahead, and they're not really realizing that the inflation is softening a little bit. And it just has to do with overall, going into a recession more than, I think that's going to overtake some of the spending that they've done. And I feel like I'm talking out of two sides of my mouth, but there's these, there's so many things, one thing helps us as far as rates, one thing hurts us as far as inflation, and just everything has consequences. But I don't see the Fed lowering, their stuff anytime soon. once they feel like they get a handle on it, I do feel they'll probably do more quantitative easing like they did before, where they're putting, I know, putting money into, artificially holding the rates down. That's something they had to pull out of so that they'd have some sort of a gun or a bullet back in their gun. So how soon? I don't know. I think people are still they believe that, rates will be down, firmly closer to 5%, without, paying a bunch in points, sometime first quarter, second quarter of this year. We were starting to see some really good moves until.
Oh, that would rock. Yeah, I was thinking it would be more like 2024, because depending on how you look at it, I mean, we had a really good, strong jobs report this week, which I was kind of surprised because there's a kind of a movement through the employment sector that a lot of people are getting laid off. So when the job report came out, and I can't remember exactly what it was because it was last Wednesday or Thursday, but that's how home buyers, that's how we know if people are going to be able to buy homes, right? Because we're looking at employment numbers.
Yes. Yeah. I mean, that's one of those ones you end up looking in the rearview mirror for, because they usually revise the job numbers, but
so don't be fooled by that. Is that what you're saying? Don't be fooled by that.
It's like it makes people feel good for a minute, and then by the time they're just hoping by the time that they send out the real numbers, that something else will make people happy, I guess. I don't mean to be all negative. I mean, honestly.
Oh, no, but it's kind of a negative situation we have out there, right? So I think it's great that we're talking about it.
Yeah, we need to. I hope that the powers that be, hear it at some level that we do need some stability. The Republicans taking over the House, that's going to add a little bit of gridlock into the government and markets like that, just because you don't have one side, either side.
Markets like that. That's what you're saying, that's a positive to the financial world.
Yeah, they do. And maybe, they'll get a little bit of a handle on the purse strings. And, like I said, I don't like either of them. I'm unaffiliated. I really don't have any use for any politicians at this point, but maybe we'll get a little bit of relief as far as some of the spending goes. So that is my hope. And, I do think that the inflation will ease, as long as, I could be completely wrong if we come up and they say, oh, we just stimulated a bunch more, or we spent a bunch more money that we don't have. But beyond that, these are very predictable. They have been for years, and we should see some lower rates really soon.
Yeah, well, that is so encouraging. So once again, when the rates go down, sometimes the prices can go up because of the lending limits. And you were going to talk a little bit about some of the lending limits. I don't know that people quite understand that every area has like a threshold.
Yeah.
On a lighter note, increase loan limits.
Increase loan limits. Yeah, it means you can. Yeah, why don't you tell people what that is and what it means?
Yeah, so I'll tell you the limits, and then Guy can tell you a little bit what that means. But for the conforming loan limit, they have bumped that up for Jackson County to $726,200.
Wow.
And then FHA is at $472,030. So on the FHA, that would mean that you could qualify for up to a purchase price of $489,120.
Wow, that's quite a lot, don't you?
Yeah, it's a nice jump.
It is, and it helps a lot of those people that might have a lower credit score. We might put somebody into an FHA loan for a little while. I'm not a big guy to churn loans. I've always tried to get people into the right loan the first time, but it might not be a bad idea if you have some credit challenges, or we need to go with a little bit higher debt to income ratios. So look at that, because the mortgage insurance is capped on that. The rates are a little lower on those.
Oh, good.
And if it's something that, we got to try to work on your credit for a little bit, but you want the house now, we can look at some options there. We can probably talk about that after the break a little bit.
Yeah, that's great. We're talking to Giles and Beth Rodriguez of Mutual Mortgage, our in-house lenders. We're thankfully brought to you by Mutual Mortgage. We appreciate you so much. Giles Scott, Ashland, Medford, and our local Rogue Valley Association of Realtors. We'll be right back. Do not touch that dial. Well, hey there, Southern Oregon. Welcome back to the Real Estate Show. I'm Alice Lema, and I want to just remind you that this broadcast will be repeated tomorrow on Sunday at 6 p.m. on KCMX FM 99.5. And just another reminder that KCMX is no longer on AM 880. It's all on the FM transmitter now, and the sound is great. So welcome back, Beth and Guy. We're so glad to have you.
Thanks.
Thank you for having us.
Yeah, another year.
So, yeah, looking forward to it. And so we were talking before the break about loan limits and how fat and juicy the new loan limits are. And we're all kind of surprised about how fat and juicy they are.
It really does cover a lot when you're looking at conforming or conventional. Loan limits being up to $726,200.
And that's Jackson County, right?
Yeah. And so there are that is kind of the conforming loan limit for the country. They have what are called high cost areas in San Francisco, Seattle, maybe Portland, some places like that. It's a different rate, even though they say that it's still a conforming loan. And by that, we mean loans that the GSEs or the government sponsored entities, Fannie Mae and Freddie Mac, are allowed to purchase. So that's really just a difference in that and what maybe a Chase Bank or a Mutual of Omaha or somebody would put on their own books, meaning like a jumbo loan or a non-conforming loan. So that's just Fannie Mae and Freddie Mac probably own 90% of at least 90% of the loans. I don't have the exact figure, but that's what they set their loan limits to as far as how much they're able to loan on the house. So that's going to be most of your loans. And around here with our purchase prices, there's some more expensive programs, but you figure 726,000, then you have your down payment on top of that. You're going up to $850,000-$900,000, and still you're in a conforming area.
And is this in reaction to the prices going up, that
Yes.
the loan limits were raised so that people could still purchase?
Yes. Yeah. And they seem to just kind of go up every year.
Mm-hmm.
They don't usually announce it till around the middle of December or something, but I remember when I got in the business and when they went up to 417,000, I thought, oh my gosh, man. And so you can see
that wasn't that long ago.
Doesn't feel like it.
It wasn't that long ago. Yeah.
So
can I ask you a opposite question? Do the lending limits go down during a decline? Like during the crash, did the lending limits go down?
I have not seen them go down.
So they don't go the other way. They just go up.
Yeah,
that's interesting.
But it's also a function of, when we talk about, you go out and you buy a motorhome, that asset is going, in a certain amount of years that's going to depreciate, and that could depend on markets and if they're available or not. But that just is an overall sign that buying a house is, in the long run, if you're not trying to just make a buck in 12 months, that it's a good investment.
And that's the other thing nobody's talking about right now. I still say this is such a good time to buy or sell. It really is. There's still buyers out there. We still have a housing shortage. And if you're a renter, then stabilizing your housing expense every month is super important. Super important.
Well, especially in an inflationary market when you're able to raise the rents depending on what the inflation was.
And this year, in Oregon, you can go to 14.5% rent increase. That's going to blow a lot of people out of the water. I don't know how many landlords are actually going to do that, but 14.5%.
Yeah, also a big issue. We've had so many clients that have contacted us for loan pre-approval because their landlords are selling. I mean, I can't tell you how many it's been this last year where 90 days to get out, and it's a hard place it puts them into.
And another thing that we're seeing more and more of, and it was another one today, we haven't even talked to the person yet. It happened literally right as we were coming on the air, but they want to have a couple of generations in the family, and they're going to go in on a house, and they're going up to, I think, maybe $1.3 million. So it's going to be, it's not like they're all shoved into a apartment or something, but the biggest thing that we see is people wanting to get closer to family. And if you have family that's aging maybe, and you don't hate them, might not be a bad
And
way.
you don't hate them.
That's important.
Well, it's funny because that's actually part of the conversation when these multi-generational families are going through houses. It's like, they're actually calculating the arm's distance.
Oh, that's funny.
Yeah.
That's
it's
your
a
end of
thing.
the house. This is ours.
It's the thing. It's like, am I going to come out of this room and see you? Then yeah, it's pretty funny. But it's also, I think, a great use of blending people's family resources and getting a nice big property that will be super valuable later.
Well, yeah. And just, just face it, as you get older, you might need a little bit of help from the kiddos. And if you can do it under one roof, I think it might be a little bit better. Maybe even help out babysitting the little ones.
It used to be like that. It used to be like that. That's how we used to roll. And then everybody's separated and now we're all coming back. So I don't think that's a bad thing.
I don't either.
And it's a buyer's market in those upper price ranges. In Southern Oregon, anything like over 700 or 800, there's a lot of choices and they're not selling very quickly. So you can really make some good deals if you want to be, in that kind of a property.
Mm-hmm.
Yeah, that one from earlier this week was a big one like that too. That's right around just under $1 million. And
so did they get the house?
I'm pretty sure. I've been talking to the agents, but it's not formal yet. But I know,
exciting!
I know they're excited, and I don't know if I'm allowed to say it or not, but his wife's coming. She's going to be running.
Maybe not.
Yeah.
You can tell that story next week if you talk to them first. Sorry. We don't have a bleeper here. We just have me going, whoa, stop. So, but the number of people still moving into Southern Oregon is quite high. How's your relocation business going?
Well, the two that we talked about today on the show are both people relocating here.
Oh, is that right?
So yeah, so it is still happening for sure. I mean, it doesn't feel like it was before, but nothing feels like it was before, and there was 5-6 things happening every day that were brand new, and it felt like everybody was moving here. But yeah, if you look at our statistics, absolutely, people are still coming.
Next week they're relocating. Yeah.
So,
and I do you also get a sense that people are more ready to make a decision for some reason in January? It just seems like we have a lot more decisiveness than we did in even November.
I think so. Yeah, I think definitely the new year, there's something about it where people are they're kind of ready and they're like, okay, new year, let's go make that decision. No more on the fence. And I think you do see that a lot.
Yeah. Well, we only have about 30 seconds left. If somebody wants to get a hold of you guys, how do they do that?
Well, my cell phone number is 541-944-6987. You can call Beth also. Either phone number will get to us. You can look us up, Google us. Anyway, we're trying to throw some videos up on our Facebook page to just kind of educate people also. So that's someplace you can try to look us up also.
Great. Well, thanks so much for being on the show. We're going to have you back again soon. Beth Rodriguez, Giles, Mutual Mortgage. Thanks so much. Have a beautiful weekend, everybody. Bye now.
Bye. Thank you, Alice.